Good evening, good morning all from the BlackBull markets trading floor in Auckland, New Zealand. Welcome to another market update. Very exciting over the last 24 hours. The Fed did what was expected. Rates were raised. The cursed dots moved around in front of the eyes of economists. More rate hikes signaled, 2, I believe, for the remainder of the year and 3 for next year. This was all consistent with the idea of the Fed raising rates and continuing again for the next few years. It's time to turn heads towards the ECB. President Draghi, extensive rehabilitation to overcome an addiction in easing seems to have really paid off. There's hopes of an announcement of a timetable for the end of QE or bond buying, as well as an announcement of that announcement for a potential scale back in the rates there. Several euro inflation figures as well to look out for today. But key thing we really want to focus on is this market reaction from the Fed upgrading their language and signaling a steeper path of policy. Just have a look at the chart here. Right. So I've got euro dollar here, and you can see there was, it was pretty much priced in, but as a reaction on the 5-minute chart here, you saw about a 62-point sell-off from the announcement, and then immediately getting bought back. You'd believe to kind of take out stops below that. Market makers there. We saw the actual 25 basis points increase, so the US interest rate now does stand at 2%. The initial reaction, like I said, was pretty broadly higher. You saw the 10-year US Treasury yields testing 3% again. I'll bring up a chart of US Treasury yields here on tradingeconomics.com. However, did try and test it to break it, didn't break it, but that was probably off the back of more tension from China and the US trade tariffs that are actually coming into play. China's central bank also held off from immediately raising borrowing costs following the US's decision. Shows that really that even though their economy is losing a bit of steam over the last few months. Turning our heads to the UK and pound in particular, we've seen a bit of a rally this morning, UK time, in the pound off the back of continued discussions taken in Parliament with the withdrawal bill being continued to discuss and proposed by the House of Lords. So the thorny issue, although remains, that's the Irish border issue. And according to latest reports, we're seeing investors skeptical that the UK and EU negotiators will actually reach an agreement in a timely manner. And as you've seen of late, it's not actually happened. But attention now turns to the ECB meeting later, as discussed. The ECB likely only discussing policy options and, of course, keen to see what the data's like moving forward. A lot of research teams and analysts out there are expecting the taper of QE to be announced July moving forward. Although an announcement today cannot really be discarded. So really the assets to watch for these headline data figures would be euro dollar as well as the key euro indices. So let's just turn our heads to the euro crosses here. Currently posting 118.23.6 on the bid, and we're just crossing the 200-day moving average here on the 4-hour chart. The potential to see if this double top forming here around the 118.39 level gets broken. We could see a bit of upward momentum today past that level, heading towards the 119 level. Definitely interesting. Support, however, for me, I've had it for a while now, plugged in around the 117.15 level. It's a key kind of short-term support as well as the 117 overall psychological level. And then, as discussed, of the 118, we're looking at kind of the 118.50 level as your initial resistance, where that previous high formed about a week ago, beginning of the month. Look on the 4-hour chart, you can see a nice formation there within this range. So technical, from a technical side, potentially we could be looking to breach either past one of those ranges there. Ahead of that, looking a bit further on, you've got the 119 level mentioned on yesterday's video as well, psychologically significant for a more longer term resistance, and then the 120 level above that to then officially turn euro bullish again, away from its recent bearish trend as we've seen ever since kind of 20th of April, a few months ago now, following a lot of dollar strength, to be honest, and the Italian election coming in recently, really putting a lot of negative sentiment around the euro, not helped by dollar strength. Today, in about half an hour's time from when I'm doing this video, perhaps you've seen it already, but UK retail sales data would be out. Key figure, US retail sales out 1:30 p.m. That's UK time. We saw US inflation at 6-year highs a few days ago. So a lot of concerns around inflation and whether these interest rate hikes will actually slow it down. So keep your eyes on these important figures. Pairs to watch today: euro dollar, pound dollar, gold, of course, off the back of any reaction moves from the ECB meeting later on. Key event, ECB meeting. All eyes peeled on what Draghi says. Any policy decisions, keep your eyes on your charts. We're here to help as always. Subscribe down below. For any questions, please let us know. All the best with your trading today.